when you compare with other countries, definitely this market stability also is going to be there in the, in the capital market. Now, what are the recent trends in the Indian capital markets? So let's see when a capital market increased FPI, foreign portfolio investments participation, and digitalization, growth of startups, and the sustainability focus. Um, so increased foreign portfolio investments participation also one of the recent trends in the capital markets is liberalized policies for the foreign investors. So those who are going to investing in a different portfolios. So in coming with the investments, are there these capital markets increasing the participation. They're accepting funds from the public as foreign companies in different portfolios. And also distillation is completely there is no manual system. There is complete distillation to introduction of the online trading and the platforms and the mobile apps also. There is a very fast and advanced technology they're utilizing for the distillation to do the capital, business. And the growth of startups also more initial public offerings from the startups and technology driven companies. So latest startups they're also increasing. That is one of the recent trends that are trends in the capital markets. So more IPOs, initial public offerings from the startups in India. By using the advanced technology-driven companies also participating in the capital market. That is one of the recent trend in the capital markets, and also sustainability focus. So anywhere, any in the country, as are the different stock exchanges also, they also sustainability is the sustainability of in terms of economic growth and development. That is a rising of interest in the green bonds and the ESG. That is environmental, social, and government instruments also sustainable in them. The recent trends in the Indian capital market. So another one is that a market, money market. So money market is different than the capital market. Let's see that what is the money market an importance. So the money market is in a segment of the financial market where short-term instruments with a high liquidity and maturities of up to 1 year traded. So in the money market, not beyond that more than 1 year. So up to 1 year, what liquids and matures are going to be there in the short-term instruments. So it is a crucial part of the financial system, enabling business, governments, and financial institutions to manage their short-term funding and the liquidity leads. So what are the short-term funds required are the important to enable the business or developments in the governments or the financial institutions to the liquidity needs in this money market. Now see what are the key features of the money market. There are short-term instruments, liquidity, low risk, high volume, and unregulated segments are going to be the key features of the money market. The short-term instruments deals with the primarily in instruments with maturities less than 1 year. And the liquidity, the instruments are highly liquid and can be easily converted into cash. So always, in the money market, the liquidity is important a point to convert into cash because that we are going to encash that what are the shares are the things are going to be there in the this money market and low risk is there. So when you compare with some other segments, there is a low risk because we are going to investing in the short term purpose. So there is immediately we can also get the maturity within the short term period. So the risk is very low when you compare with the other long term purpose of investments. So the high volume. So handles the large volume of transactions daily. So day to day transactions may be there in the money market. So like a how we can encash money by the if you are investing money in the morning times, so we can also convert that cash encash it by the evening time. So daily we can do the business for high value. That means we can liquidate the cash into immediately and how much we are going to investing that we can immediately we can withdraw or we can sell or we can purchase anything in the in a day-to-day business transactions and unregulated segments, because some part of the money markets are less regulated compared to the other financial markets, because we are going to doing business within a 1 day, because even not controlled within 1 day also in the this market. So in this this money market is unregulated segment in some types. No, functions of the money market. So functions of the market is in a liquidity market, market, and facilitates the monetary policy and promote the savings and investments and efficient allocation of funds. So these are the functions of the market, money market. So what is the liquidity management? How they are going to managing the liquidity? So these money markets helps in institutions manage their short-term cash requirements. So what are the requirements? Is there short-term cash is the requirement? This money market manage the liquidity from the public or the investors and facilitate the monetary policy. So what are the central banks, that is the RBI, are going to using the money markets to implement the monetary policy that facilitates the monetary policy. That monetary nothing but we are going to cashing that business transactions and promotes the savings and investments. So those who are going to investing money per day or per week or within 1 year below, they promote the savings from the public. So it offers a safe way avenue for short-term investments. So in the short-term investments, these money markets promote the savings from the publics to invest money in the short term, because they are going to investing in within 1 year of time, and efficient allocation of funds. So efficiently, they are going to allocating funds in a different portfolios. So it is channels ideal funds into productive uses. So productive uses they are going to utilizing into different allocations. Participants in the money market. So there are central bank, commercial banks, and non-banking NBFCs and corporations, and mutual funds and government. So there are 6 types of participants are there in the money market. That what is the central bank? Central bank nothing but RBI regulates the liquidity and controls the monetary policy system day-to-day transactions. How is the fiscal policy? How is the liquidity? How control the monetary? How where is the rates are increasing? All things are going to be playing looking about this Indian financial positions or systems. And the commercial banks. So the commercial banks are in the public from the public sector or the private sector banks, the major participants. They're providing and borrowing short-term funds. So these commercial banks always do the business day-to-day transactions generally. So these private sector, public sector, and foreign banks also participating. Major banks like ICICI Bank, SBI, HDFC, HSBC, like these banks are going to participating in the commercial segments. So NBFCs also, non-banking financial corporations also engage in the borrowing and the lending. So NBFCs like Tata Capital, Pyramid Finance, some other LSC Housing Finance, these non-bank NBFCs also playing a money important role in the money market. And the corporations raise short-term funds for working capital requirements. Some corporations also playing and these participating in the money markets. And the mutual funds, the invest in the money market instruments to provide liquidity. So the mutual funds investing money markets instruments in the providing. So mutual funds also one of the long investment portfolio to the investors, and also government also issues the treasury bills to manage the fiscal needs. So they used to issue the treasury bills. So for example, treasury bills, if there is any urgent payments are there to the welfare or some other purposes, they used to require the funds from the public. So that is the fiscal needs for the money in the money market. And the instruments of the money market. What are the instruments of the treasury bills? So treasury bills is nothing but issued by the government to manage short-term liquidity. The maturity is 91 days and 180 days and 364 days. So that is completely a 1 year short-term period, within 1 year. So hold at a discount and redeem at a face value. For example, they used to offer a 12% or 8%, 9% rate of interest, that is the discount redeemed at the face value. For example, if they're going to taking money from the public at 1 lakh rupees, they're going to adding 12% or 30% at the end of the 90-day, 180, 91 days, or 100 days, 182 days, or 364 days term. They are going to issue the treasury bills in the money market. And the commercial papers. The commercial papers also unsecured short-term debt instruments issued by the corporations. Some corporation companies issue the commercial papers, but it matures range from 7 days to 1 year also. So within 7 days or 1 month, you can also get the matured. But there is unsecured. So used to meet working capital requirements. So for example, L&T company or Metro products, so the companies used to take these commercial papers for 1 week or 1 year. And certificate of deposit CDs issued by the banks and financial institutions, and matures range from 3 months to 1 year time, and offers a fixed interest rates, maybe 12% or 18% or depends upon percentage. There is fixed, there is no fluctuation, there is no change of interest rates, but generally it is 3 months to 1 year matures range. And call money and notice money. And call money is nothing but short-term loans with a maturity of 1 day. So within 1 day, they are going to, it's getting maturity. And a notice money, loans with a maturity of 2 to 14 days. So that is a call money's nature. And the repurchase agreements, repos. Repurchase agreement, nothing but in agreements where securities are sold with a commitment to purchases them at a later date. So repurchase. So at the mature day, after mature date, they're going to repurchase that they're coming with agreement, re-agreements or repurchase agreements. So used for short-term borrowing by the financial institutions below 1 year of time. And bankers' acceptances, a short-term debt instruments issued by the company and guaranteed by the bank, because then again bankers are going to issuing an agreement. They are also the giving guarantee. It's commonly used in the international trade. So in international trades, the bankers are going to giving the acceptance to the money market and regulations. Even also in these like a capital market, even RBI and the SEBI also regulating this complete money market, this business. So Reserve Bank of India. The Reserve Bank of India regulates and monitors the money market and used to like a repo rates, and there is a reverse repo rate to control the liquidity. And SEBI also regulates the money markets in the mutual fund segments. And what is the importance of the money market? So it is facilitates the economic stability. It ensures the smooth functioning of the financial system. So the money market completely facilitates the economic stability, and efficient monetary policy transmission, provides a funding for short-term needs, and also promotes savings and investments. So facilitates the economic stability. It ensures the smooth functioning of the financial system, and efficient monetary policy transmission helps central banks implement policy changes effectively, and provides the funding for short-term needs, and supports the business, governments, and financial institutions, and also promotes the savings and investments. It offers a safe and liquid investment of opportunities to the shareholders or the investors in the money market. And the recent trends in the market. So increase the digitalization, so and raising role of NBFCs, growth in the commercial paper, and shift in policy rates. So this use of electronic trading platforms also one of the digitalization in the recent days. So the recent trends in the money markets are completely coming up come up with digitalization, and also raising role of NBFCs, non-bank financial companies also playing a greater participation in the short-term borrowing, because they're also issuing the funds to the public for the short term, maybe 3 months or 6 months term. Also, they're issuing the loans to the, or else accepting the issuing the deposit, loans to the public. And also growth in the commercial paper. So increasing preference by the corporations to meet short-term funding needs in the money market, and also shift in policy rates. So frequent changes by the central banks to manage inflation and the liquidity in the in the role of money market. So with that, now I'm wind up of today's session. So tomorrow we can come with some other concept.